Hello, everyone. Welcome to Hidden Edge Pod. Man, this is episode 27. Is that crazy?
Yeah, but this is a Patreon only one, right?
That's right. I haven't actually counted the Patreon only episodes, so I'm just counting by like the amount of episodes we've had.
Yeah.
Deep dive ones. But yeah, wow. Woo. Dude, what a Friday.
I was in the chat. I was like, man, it looks like the market had its period, man. It's just a sea of red. But when I look at times like this, I have to ask, like, what was the cause of all of this fallout? And the only thing that came to mind, there's two things that I think was kind of like hit each other at the same time. One was a really, really weak report by Walmart, where Walmart, it's like a stalwart of the economy, lost
That's what I
about
was
a
thinking.
good part
That's
of
what
it.
I was
So
thinking.
that
Yeah.
so that was one thing, and the other one was the whole like COVID part two from China. I think that's another thing that scared the market. But you know, I think this was an overreaction, and I think this is something that's very interesting because we spoke about this early this year, which was that with Trump, we were going to get a lot of volatility early on in the year, right? Because all of these new policies, they were just being shot from the hip. Like it's just like a barrage of things just happening. So it's really hard for the markets to figure out what exactly is going to happen. But what's very clear to me is that when I look at the commentary by Scott Bessent, the Elon Doge thing, everything is gearing towards getting the 10-year down, right? 10-year needs to come down, in my opinion, at least a 2.25 for like the housing market to unlock a little bit, with more refinancing happening and all the other stuff happening. And also at the same time, this national debt thing becomes a lot less of a problem if they're able to kind of refinance the existing debt at a lower interest rate. So I think overall, when I look at the markets, I'm seeing that that's the pattern that we need to follow. And that's the thing that we have to keep in mind. There isn't, as far as I can tell, there's no credit issues. There's no bubble issues with certain industries. I mean, you could theoretically say maybe AI is in sort of a bubble, but then again, I'm also seeing, people actually utilizing products. Are they overpaying for those products? I don't know. I guess we'll see. But as far as I can tell, there aren't any bubbles as of on my radar at the moment.
Yeah, no, I don't see any bubbles either. I mean, I still think I don't want to say the early innings because we're already 2 years in, but I think we're in like a major technological evolution. Very equivalent to the internet. However, I think in this case, I think it's less speculation and like things are actually happening right now. I mean, I'm seeing it every day with work, working in the back end IT side. But honestly, I think something like this is what amplified it. This was actually operations expiration date. It wasn't like a quad witching or anything where you had like 4 different derivatives expiring on the same day, but it was the weekly expiration. It was not the futures expiration. I believe it was the monthly expiration as well. But yeah, those tend to increase the volatility up or down in terms of like the last hour or two of close, or even the last day, especially. But usually, OPEX week tends to be a very turbulent week in either direction, and the magnitude of it is usually seen toward the end of the week. So I think that kind of got amplified. I do agree with you. Walmart earnings the guidance was pretty bad. And yeah, they're the forefront of the consumer sentiment. I mean, I don't know how much Walmart contributes to GDP, but a lot of people look at that. Look at Walmart's guidance. It's like basically looking at guidance for Home Depot on Tuesday. Home Depot is going to get pretty good guidance as far as the housing market goes, and I think that one's going to be pretty important. Lowe's is reporting on Wednesday morning, but that's not nearly as big as Home Depot. So Home Depot tends to move the market, maybe not so much right now, but I remember that tended to move the market when inflation fears were coming in, home prices were skyrocketing and stuff. And like whenever Home Depot would have an earnings report and they give like really good guidance and really good numbers and stuff, the market like ripped up because it was like, oh, this is actually really good because the housing market's doing good and that's propping up this is like 2020 and stuff. And then, Home Depot tends to have an effect in the entire market, in my opinion. But I think part of it is actually contributed to somewhat the fears that Microsoft is having. I don't know if you saw that TD Cowen report that came out today regarding Microsoft's slowdown in data center spend. And for me, I personally think that's more of a Microsoft thing in terms of shifting strategy, not so much of a whole macro front in terms of like data center expansion that we've basically been seeing across the board for the last 2 years. So I don't think that's going to wholly impact or give like insight on what's going to happen for NVIDIA. I think that's like a much bigger game, right? So the way that I see it is like you have the smartest people in the entire world working for these mega cap companies, right? And controlling them. Like, do you really think that they would stop ship and just guide down CapEx unless they knew what they were doing? I think they know what they're doing, in my opinion. Or at least I hope they know what they're doing. $3 trillion company. But in light of all that, I do think the demand side is still there. And I do think we're, I would say, third inning. I hate like on the news, like or CNBC, like they compare this to like a baseball game, right? Where it's like the ninth inning, it's over, right? I don't really feel that way, but I do think we're pretty early in the AI cycle, and I think we haven't even had AGI yet, so we're yet to see what's going to happen there.
Well, I mean, there's other branches that are coming out. Like, here's an example. I'm working on this project at work where I'm taking the architectural diagrams and updating them for all the applications that my team manages. And let me tell you, man, this shit is just the amount of money that we spend on managing like different like I can tell you, it would look like a giant spaghetti diagram of how it goes from like one virtual server to another, to another, to another. And then there's databases that are on another side, and then everything connects to one. And then we have like some applications that are like cloud native, but then also have like an on-prem backup. And then we have disaster recovery. It's like, holy shit, everything is the data center. You know, everything eventually touches the data center, and all the applications that we have, they're all mission critical applications that need like 100% uptime, right? And the entire time I'm just like, dude, cybersecurity, no wonder CrowdStrike is making so much money. No wonder Palo Alto makes so much money, because the amount of data that you have to secure is just endless. So it's growing endlessly, and the threats are growing endlessly. And these guys, every time you get more software, it just keeps getting compounded on. So it's a very interesting like field that we're in. As far as the mega caps, I think Google, and I keep saying that Google One is undervalued, but their GCP thing, they're growing fast. I think I've seen so many companies partnering with Google. The other thing is Google owns their own infrastructure, and I think they're trying to undercut Microsoft a little bit. And because they own their own hardware and they own their own models, they're actually able to sell at a better price to a lot of software companies, especially a lot of startups, in which case now all the applications are being built. They're going to be Google native, GCP native, not all of them, but a lot of them is going to have some nativity built into it. So I don't know. I looked at that. I've been really, really digging deep this week into Latin American finance and trying to figure out like what level of like which inning are we in with LATAM digital finance, right? And because with NuBank we have a pretty big position now, or at least I have a pretty big position now. So I wanted to figure out like, okay, what are some of the verticals that NuBank is going to be reaching into in the next couple of years to grow their market share, not only in their core markets right now, but then also other markets in the region that could possibly be ripe for expansion. And so I was trying to figure that out. And I was also trying to figure out like, what are some of the other areas that they're going to go for? Because I mean, you saw that shift from basically growth at all costs to now like managing some of it. And I think that's going to be something to keep in mind over the next like probably like year. I have a feeling that that we're going to see like a nice retracement of NuBank in the next probably like 3 or like maybe even 4 weeks, because people are going to wake up to this FX thing. And maybe you can explain the FX headwinds, what what the issue with that was, and then I'll kind of go into some of their margin stuff, because I think that's another point that we have to take a look at, and basically come to a thesis and a consensus on what is the upper level of a price target we should set for this company.
Yeah, so let's by the way, just a heads up, my son is going to be inside the house, so it might make a little bit of noise. Hope you guys don't mind. But actually, I'm going to share this first. Share my trading view screen. Okay, so let me start out by showing the chart of the dollar. All right, I'm going to show the chart of the dollar, and then I'm going to do the Brazilian real. All right, so if I overlay NuBank with this, we could see here that this is where the dollar bottom, around 100 for the DXY. Let me make this bigger. So right around here, early October, this is where the dollar bottom. And then up until November 22nd, we saw a massive rally in the US dollar. Actually, I would go as far as saying up until mid-January, we saw a very sharp rally in the dollar. And this is like a massive 10% move. In the US dollar, the US dollar is comprised of 4 major currencies. Okay, so it takes a basket of those currencies and then aggregates them and compiles them against the dollar index. So the dollar index isn't actually like how powerful is the US dollar. It's measured how powerful is the US dollar with 4 major currencies, and those are the British pound, it is the Chinese yuan, it is the Japanese yen, it is the Swiss franc, and actually there's a 5th one, the euro, right? So those are the 5 major currencies that make up the DXY, or the dollar index. So the dollar was very strong against all of those currencies around here, end of September, and it lasted all the way up until end of January or beginning of January. And you can look at this chart right here. NuBank was rallying in tandem with this up until this point right here, right? Actually, up until this point right here. Actually, this is probably where they had their earnings. But NuBank just like went straight down until mid-December. And that kind of correlates around with where the dollar is, right? But a better idea of this is to look at the Brazilian real. The Brazilian real is important because the Brazilian real is the Brazil currency, and NuBank has 90% of its revenue in Brazil. So 90% of its sales is in Brazil, which is heavily impacted by the Brazilian real, right? And why is this important? I mean, well, the chart can speak for itself, right? So if this is the Brazilian real, this has just been in a massive downtrend all the way up until the end of December. And if you look over here, NuBank was still rallying against it because it was pretty strong. But right around here when they had their earnings, that's when it just freaking collapsed. Okay. So we see the Brazilian real gaining strength, and then we see NuBank fall to where we saw on Friday after its earnings. And that doesn't necessarily correlate with this chart. So NuBank is down to around the same point with the dollar. It was down. But we have here the the Brazil real was down, but we have here the Brazil real hiked or rallied against the US dollar from its low about 13%. But NuBank has retraced down after its earnings to its recent low around $10.82. I think that this is a very big opportunity to get into NuBank right now. And I do agree with you, because I think that unless the dollar rallies again, it's possible that NuBank is going to revert back to its mean and probably get around near the $13 range. Okay. Because during that earnings call, which was reported for the 4th quarter, when was the 4th quarter in NuBank? The 4th quarter is from the beginning of October all the way until the end of December, right? So we have over here right around here, right? And what happened during the fourth quarter? We literally went from the top of the Brazilian real all the way down to the bottom. So this was probably the worst quarter that NuBank could report all of its earnings and sales and revenues, net income, interest, and net income margin, because the currency that they're reporting with completely lost value. This is like, dude, this is like a 15 to 20% drop in the local currency of Brazil, which is 90% of its revenues, dude. This is like the worst possible time for them to report, because that means that any number that they're going to have in terms of sale, unless it's constant currency, you literally have to convert it based on that day's revenue. You have to convert it down to US dollars because that's what they reported. So everything that they reported drops because the Brazilian currency is way weaker than the US dollar. Now, I don't have the exact figures in front of me to do that. I'm just basing off of their quarterly earnings that they reported. So if we look,
I have it right here. I have it right
yeah,
here.
go
Take
for
a
it.
look.
Okay.
So if you see this, like last year, right? January, February, and March on average, it was about 4.9 Brazilian reals to $1 US. If you go to the same, well, sorry, that was the first quarter of 2024. It was, what was it? What was it weighing against? It was 23. So right here. Where did it go? Right here. So you see this FX neutral measures at the end of on the average end at the time was about 4.9, and this one was 5.9. So if you think about it, that is almost 25% devaluation in just 1 year, like year over year. So when you look at the chart over here with their growth numbers, right? Hold on one second. EIP. Well, their profits is the one that I'm concerned with. They're right here. Their net interest income. It looks like, hey, look, their net interest income only increased about 200 million, right? So it went from 1.3 billion in net interest income to 1.7, right? But it's actually, if you took it and did it based on like even neutral, it would have been much higher than what it is.
Yep.
That's
Exactly.
being reported. You know,
Exactly.
so if you look at its margins, their margins are okay. Yeah, they're taking a little bit of a downward move in their margins. This can be explained by some of the mix that they have from moving from more riskier credit card to more secured lending. The reason why is secured lending actually is a lot less risky. So when you actually lend it out, it's, you know, you can't charge as high of an interest rate. But what's good is that as shareholders, for us, we want more secured lending. That means that there's less money that these guys have to keep on the side for losses, right? Especially if the economy goes bad in Brazil, the last thing you want to do is lend to a bunch of people that are never going to pay you back.
Well,
so if you look,
first,
yeah,
let's explain what it means by secured. So secured lending means that the money, let's say I lend you, I loan you a $10,000 loan, and it's a secured loan. That means that there is collateral that's backed up in case you don't pay the loan. I have collateral against you, so that way I can take from that collateral. It's basically like selling a put. If you sell like $100 put in a company, then you hold $10 collateral, $10,000 collateral, which means that if for some reason you cannot pay for that put, if it gets executed or if it gets exercised, that $10,000 is still held on the side by the broker. So that's the reason why it's much less risk, because it's secured. Now, if it's unsecured, that means that there is no collateral, which means that they're going to charge a higher percent interest rate, but it is much higher risk for NuBank.
What's good is that if you look at their consumer credit, like NPLs, which is non-performing loans, that means these are the people that are late, right? So if you're late by 15 days to 90 days, this is where it's being recorded. And if it's late more than 90 days, this is where it's recorded. Now, why is this important? Because the higher the NPLs, that means that the less of a chance there is that they're going to get paid back, and they have to just write off that money as loss, right? So you kind of don't want to see this trend too high up, because that means that now you're risking credit losses, right? Where if you're lending money to people and they're not paying you back, you got a problem. So one of the things you want to do is kind of maintain this to a certain level and a degree where you as a business are not going to lose money. So one of the things that I really like seeing was from Q4 to Q1 of 24 to Q4, the NPL numbers are starting to come down for the 15 to 90 day. Now, what does this mean? That means that they're lending a lot less money to risky borrowers and instead kind of focusing on better return. NPLs that are 90-day plus, they're also moving downward. This is also another great thing in terms of like efficiency. So if you look at this, their goal is to get to a level where they're making really good money by lending money out, but they're not going after consumers that are less likely to pay. You know, you kind of always want to do that where you're adjusting your business model to the needs of the consumer for hyper growth. But once you achieve hyper growth, you can kind of be a little bit more selective on where you're going to basically give the money out to. So now they've got a bunch of credit profiles on all these people. And so now they're focusing on getting more and more revenue out of people. So I think that's one of the reasons why we're also seeing, this new launch of this thing called NuCell. I was looking that up. That's a great business for them. It doesn't really cost them anything. It plays right into their ecosystem. Their Mexico business, it's a brand new business, so that's gonna like grow exponentially on that side. So if you see like in the first slide, like some of the accomplishments they had right here, you can see that they grew almost 12% of the adult Mexican population is on NuBank now. It's 91% year over year, and this is just going to keep growing. The one bad thing though is that all this deposits that they got, though, the 4.5 billion deposits, a lot of them were, how do I say, like kind of expensive for NuBank, where they had to pay a good amount of money as, interest. So you can borrow money from people as depositors, but then you have to kind of, like entice them to stay and keep their money with NuBank. And right now, the thing is, they make money on something called a spread between how much money they can get from loaning that money out and how much money people keep in the bank. So they had to lend out, they had to give a lot of interest for people to switch. But the benefit is, once you get all these people to switch to your platform, it's really, really hard for people to leave, So I think that's something that was also covered in the conference call, which is the goal of NuBank isn't that they want to be like a credit card business or they just want to be like a second fiddle. No, they want to be a primary bank for a lot of people. And the reason for that is because this way you can do like value added services and generate more revenue per user over a long period of time. So,
this guy actually had a interesting suggestion. We should probably get data-driven investing in one of our videos, because he could literally like explain this entire thing.
Yeah.
I mean, I only know so much, but I mean,
banking is not nearly as complicated as people make it out to be. There's three ways. There's three ways banks make money. Okay. The first way banks make money is on the spread. You give them something, they lend that money out. Now, they don't lend out everything, but they lend out a good portion of it, right? So if you have, let's say, $100 billion and you're basically, paying to that depositor 5%, and you lend out, about 70-80% of that money to someone else at 10%, you're making money between the difference between the two, right? So the depositor cash versus that. So that's one way the banks make money. Another way they make money is fees. Every time you transact, they're getting pennies off of that transaction, whether it's because they're providing that completion service to, let's say, a business or to the consumer, where, you want to do an electronic check or you want to transfer anything. They're picking off pennies for every transaction. So that's a second way they make money. And the last way they make money is by actually lending that money to non-people to like banks and stuff. So overnight. So when you have like, let's say the central bank, when they have like overnight lending, they basically lend it to the overnight repos, and basically every morning they get the money back, but they get a little bit of interest on top of it. So that's three ways
Yeah.
that they typically make money. You know, now
Yeah.
NuBank benefits from another thing, which is value added services. So they're not only a bank, but they're a credit issuer as well, right? So they're kind of like trying to do this like thing where they're making money like in all directions, and it's working. It's the same model that everyone else uses in the world as well. So yeah.
No, I agree. I mean, it's a solid business in my opinion. Like I don't, I think this is a great long-term hold for myself. I mean, I've had it for quite some time. But I started adding in size when we visited this levels last time. Don't get me wrong, though. It sucks that we're right back down here. But it's funny because just the other day, I was hoping it would come back down here. And now that it is, I'm just like, oh, man. But, I did what I did. I
So
added the risk on
so
when I was supposed to. Yeah, go ahead.
so Rob is asking a good question. So what did the market not like the most, the
I'll
FX
show
or the
you.
financials? There were three things that the market did not like.
I'll
Number
show you.
one,
Yeah,
that
go
they
ahead.
missed earnings estimates, right? Whenever
Yeah.
you have these analysts, they make estimates. If you miss their estimates, the market's like, oh my God, these guys they missed an estimate. So that's one thing. Second thing that people did not like was that if you look at it on the chart, their growth looks like it's slowing down significantly, but it's only because of FX issues, like so foreign exchange stuff. So that's another one. The other thing that people did not necessarily like is that it's not in hyper growth mode anymore. So some of the industry, like I said before, going from really risky credit cards to secured lending where you're making less margin, but it's more secure. What that means is that they're not in like super hyper growth mode when it comes to extending out their loan book and making a ton of money utilizing that, but they're also taking on more risk. So that's the thing. This company is valued like a growth company, right? So if it doesn't grow as much, you shouldn't value it as a growth company. You should value it more like a regular traditional bank. And regular traditional banks, they trade at a much lower multiple than what NuBank is currently trading at. So that's the main reason why the market kind of sold it off. I disagree with that. I think people are smart enough. Their analysts are going to be smart enough to figure out that, look, the currency headwinds are a thing that was being dealt with last quarter. This quarter, it's coming down. And if the Trump administration gets what they're trying to do, the dollar is going to keep coming down. The Brazilian real is going to keep strengthening. And at the same time, that's going to end up acting like almost like a tailwind for these guys with future earnings. I can't say that's going to happen in Q1 and Q2 because the Brazilian real at the time was trading at a much, much lower FX. But when you look at this number, especially in Q3, Q4, year over year, it's going to look crazy, crazy different. So go ahead.
My bad. I'm on mute.
Yeah.
I wanted to take this post. I mean, it's not. I don't take any credit for it. This is from Brian Feroldi, but it's an amazing graphic, right? So you have a startup where they're literally just burning cash, right? And they come into hyper growth mode where they're expanding their gross profit margins, where they're kind of running a little bit more lean with their business, but also on top of that, they're increasing their revenue. So when they come to self funding, they start to become EBIT or operating income profitable. They start to get close to profitable on a GAAP income perspective, and then we have operating leverage. I think NuBank probably falls into number 4. They're transitioning from number 3 to number 4, where they're leaving the hype. See, the unique part about NuBank is that they've been in this hyper growth for a long time because they are in an emerging market, in a very untapped market. And they continue with this hyper growth even through the self-funding stage and even into the operating leverage phase as well. They were able to sustain that growth for a long period of time. The thing is that a lot of people expected this high double-digit growth to continue for a long period of time, when in fact that's not nearly possible, especially when you come to the scale that NuBank is in. Like NuBank makes so much money, it's not even funny. Like okay, hold on a second. I wanted to go up to where is that chart with their revenues on here? Is this the one? No,
Yeah, it's
that's
right
not the
there.
one.
Right there.
Oh, yeah, my bad. No, this is
No,
customers.
that's active. I'm saying the next one over.
Oh yeah, yeah.
Right there.
So just like look at this. Look at this 2.4 billion last quarter. Okay? Like this is not a this company's a big company, right? They're like I think they're like $50 billion market cap. They're at about 11.5 billion for all of last year because they just closed off fiscal year 2024, right?
Yeah.
They are already profitable. Their net income margin is 28%, right? They're adjusted as 31%, whatever. But if you look at this FX neutral, they actually grew at 57%. But if you look at the headline numbers, they missed earnings. Okay.
Yeah.
And that's based on a non-FX neutral. That's based on the fact that the Brazilian real dropped like 20% during this entire quarter. Like it is one of the worst quarters to report. It's going to be one of the worst quarters. That's why they kept on talking about FX headwinds and stuff. But NuBank does not provide guidance. They also don't like to provide clarity on where they think it's going to be in the future. They're just bullish on their long-term future, right? So as an investor, especially in Wall Street, you can't buy a stock like this that has a double miss, right? Because there is no triple beat or triple miss or anything. It's only two. It's only revenue and EPS because they don't guide. So when you look at this, right, you really just want to look at the FX neutral because, like I already showed you, I'm gonna share the the Brazilian real chart again. Like I already showed you, look what happened since the beginning of January until now. The Brazilian real rallied 12%. If NuBank ends this quarter now, they're halfway through the quarter. If they end this quarter now, I guarantee you the FX neutral is going to be lower than the real FX that they're reporting on because of the fact that this currency has been going up, right? So I don't know what they're going to be in terms of double-digit percentage coming this quarter, but I bet you Wall Street is setting the bar pretty low for them to do very well this quarter, and that's actually reflected in the stock price, which is like look at this freaking chart. Even the RSI is at is that RSI at a 2? Jesus. Anyways, I mean, it's just like couple that with go ahead.
So the strategy, basically what I did was I had $25 calls that I sold against my $15 calls. I bought them all back at a nice profit. Took that profit, put it to the side. Now, to do the same thing I did before. This thing recovers V-shape, gets about $14, $15. I'm going to sell the $20 call against it. Same thing for January of 2027. Now, what is that going to do? That's going to basically let me get pretty much all of my capital back. And the only thing that's going to be going up is like the principal, you know? I think it's a very easy strategy to run right now. So if anyone here who's, if you're not into options, don't do it. But if you are and you understand spreads, and I hope at least this point people are getting it, wait, just be patient. Let this thing get back up. Once this thing gets back up to about 13 and a half, 14, you can consider selling some calls against this thing. And once again, now you're basically got all your capital back and you can just chill. So if you haven't closed out your $25 calls against it, I would close them out. Now, what is closing them out? That means you just buy them back at a profit. So if you sold them for $1, you buy them back at 50 cents, you basically get to keep the difference. So that's what I did. Sold them for $1.07, bought them back at about, I think, 57 cents or 60 cents. So I collected the premium and now I'm just chilling on it, So.
Yeah, I also wanted to show this chart as well. I mean, okay, so this chart may seem pretty confusing at first, but over here, how dark the line is basically how they did each year, right? Or each fiscal year, right? So the lightest line is basically how fast they were growing their customers or the number of active customers using NuBank as their primary bank account. See how like this is just rapidly increasing every single year? So that means that they have achieved nearly 61% are nearly 60% of all their customers having NuBank as their primary account in the fastest pace they've had any year. So that means they are gaining leadership in this entire sector. If we look at this chart, number of products per customer, this isn't the highest, but that means that so far for fiscal year 2024 or Q4, they have the most amount of products signed up per active customer. And over here, this is probably one of the most important metrics, monthly RPAC by quarterly cohort. So this basically means average revenue per acquired customer. This is how much they're making. This is how much they're making in revenue per customer. This number is like, they're accelerating so fast on this chart. And this is already including the US currency. So there's also one other thing that I want to point out, and then I think we can probably
So
close
VIX, yes, that's exactly what it means. It means that they are primarily using that. So imagine right now, your bank, the one that you use the most. I'm sure you have other like 2 or 3 banks. Some people have 4, whatever, but a lot of people have one bank and they do everything from that bank, right? They issue checks, they're paid in that account, they pay their credit cards with it. NuBank is trying to make sure that they are the primary banking provider for majority of the people. So yeah. And
Okay.
you know what's funny? That he just mentioned direct deposit. That's one of the businesses that's been growing significantly for NuBank over the last couple of quarters, which is they have payday loans, right? Where you can use your anticipated like paycheck beforehand in order to basically borrow against that, so that you can, go use it for something. So let's say I have an expense coming up and I'm getting paid next month. I can just get a payday loan and basically, go buy whatever I need to buy. And then when the money comes in, they just deduct it from that. So,
okay. I'll answer Rajan. I answer your question after this, but another reason why I think the stock is down is because this is the second quarter sequentially that their net interest margin, which is basically the amount of net interest income they receive divided by their total sales, that has actually decreased for the second quarter. But they said this is really attributed to the fact that they have less risk in the amount of customers they have. So if I'm loaning someone $10,000 with a credit score of 750 versus someone with a credit score of 600, the guy with the person with a credit score of 600, I'm going to charge them higher interest because I'm going to get more return on my money and factor in the risk that I'm taking by loaning this person that much money. Versus the person is 750, there's a pretty good chance based on their much higher credit score that they're going to pay me back. So therefore, I don't need to charge them that much interest. Their risk profile is decreasing, which means that the concentration of their clients with a lower risk score is increasing. So that means their clients are becoming better at paying and getting better credit scores, quote unquote credit scores. I don't know what they have in Brazil exactly, but it's less risk. So all that added together, especially since most of their revenue is concentrated in Brazil. Brazil is actually a very quickly growing market. I think it's like around 4% GDP. Also the largest population in South America. But that coupled, it's the second quarter, 17.7% net interest margin. So year over year, as far as FX neutral goes, for the amount of net interest that they receive, it grew 57%, but the margin is actually decreasing. So this also goes hand in hand with the fact that they are using more operating leverage to be able to capitalize more on the bottom line per customer, right? And this comes with interest. So you have to remember that if their top line does not grow as fast and their bottom line comes less risk, then there's a chance that this number might decrease. But you also need to look at the fact that they are also decreasing the amount of risk they're taking in the market, which at the end of the day, if you ask me, I think a lot of people were concerned about why, I forgot what I was going to say. Why they're taking less risk. So that means that, in my opinion, I think that they're intentionally taking on less risk because there was a point when let me share this screen again. There was a point when there were a lot of analysts that were complaining about the non-performing loans. Hold on, where is that? Was that the one? Hold on. Hey, which page was the non-performing loans on?
Sorry, I didn't realize I was on mute. I think it was somewhere close. Go higher, higher. I think it was that one right there. Well, there's a chart right underneath. That's the coverage ratio. No, go up. It's one of those right there. 90-day. Yeah, there you go. There it is.
Yeah, this
That's
one.
the one.
Okay, so
You may want to shrink it a little bit. There you go. Yeah.
there was a time when the analysts were like literally tearing David Velez and the management apart because this number here was increasing, right? But then now it's decreasing, right? This is the first. Sorry, one. It's a little boy. So this is the first time that this decreased sequentially in a long time. And the 15 to 90 days been decreasing sequentially. That means that new people who are non-performing, that number is decreasing, but you have the people who are 90-day plus were still increasing, but then they're starting to pay off. So that means that the 90-day plus is falling off a cliff right here, right? So this is a sign that their risk portfolio is getting better. So if your risk portfolio is getting better, that means you need less collateral. That means you could probably loan more, but that also means that you could be using that collateral to make a big move. And NuBank is going to announce a new market they're getting into this year. So I don't know what market that is, but my money's on Argentina. I feel like that's the lowest hanging fruit out of all of them, even though they said they're not going to do that for a while. Dave Velez did comment that Argentina is an interesting market, but US does make an interesting market as well. So it might be Argentina, it might be the US, but at the same time, you know, even though you have a company that's like 30% net interest margin, net income margin, I think that it's still early in the game for NuBank. Like I think that there's a long runway for this company. Like they only operate in 3 markets, and 2 of their markets in Colombia and Mexico, they just started here a few years ago. I mean, they are growing at a much higher rate, but those 2 markets, especially Mexico, like that's like they have like barely any competition there when it comes to the middle and lower class income, right? Because again, in Latin America, pretty much for a long time, the upper class were like the only people who had their money in banks because it was just easier for them to. But NuBank is coming in with no overhead because they're a digital bank, kind of like SoFi, but also they're catering to a lot of the middle-aged population, even the young adult population. And that's what makes it such an attractive opportunity, because there's an expansion of smartphones happening across the world. And that's the reason why I'm in Grab as well, because the smartphone penetration in a lot of these countries, it's growing very rapidly. And these companies like NuBank, Mercado Libre, and Grab, they're really targeting that population, the digital population. I believe this is like a massive TAM this is a TAM that's growing year over year at a very high rate. And I want to be a part of that. So you said that I'm naked probably in like 75% of my calls, but I am going to do the same thing where I'm going to probably close a good amount of them out by selling the $20 when we get around those $13, $14, $15 levels. I'm going to do it, I'm going to slowly do it. I'm not just going to do it all at once, but I would like to actually accumulate shares in this because I do have some shares in it, but it's not like nearly as large as my option position. And I'd like to hold those long term as well, just to have that in my 80% portfolio. But yeah, I think we can move on from NuBank now. Sorry, guys. I was like really just getting into this. I mean, this is a pretty big position for me, so I want to make sure I know this inside out. But at the same time, I think it's an incredible opportunity for myself. Again, this isn't financial advice to you guys. Like, we're not telling you to go out there and buy NuBank. We highly encourage everyone to do their own due diligence. Like, please do not buy this unless you do your own research, because when this thing comes down, which it might still go down if the market still continues to weaken. Like, you need to make sure you want to be in this. So
Yeah.
Yep. Yeah, for sure, man. I'm also Mercado Libre is a very big position of mine, and that company is just phenomenal. They do Mercado Libre's GMV grew 141%.
Yeah, because Argentina, man, Argentina, like that whole situation worked out really well, man. Yeah, just other than that, one of the things that we should probably talk about is how to hedge for the rest of the year, just in case we do get lower interest rates. So there's two ways that we can play this. One, of course, is TLT, right? So if you can see here, if we're anticipating rates at the longer end coming down, you could always buy TLT. And TLT basically is like the long bond. So here, let me just bring it up real quick. So when it comes to risk, like equity risk, what tends to happen is they'll jump into safety. Now, where is the most safe place to be? The safest place to be when the markets are like experiencing volatility and possible correction is in treasuries. So if you look here in the last 3 months, like treasuries went from 89 to about like right now to from about 85 to right now 89. And you can see here as the 10-year goes, as the 10-year yield goes up, the treasury, which is the underlying thing, goes down, right? So it's inversely correlated. So if we're thinking, hey, Scott Percent wants to get the 10-year yield to come down, this thing should rally. So, and this thing pays monthly, by the way. So, if you're trying to hedge, this is a good way to hedge yourself. Now, the problem with TLT though is that, the newer maturities that are coming out, the newer maturities are going to be at a lower yield, right? Instead, what I'd like to do is buy companies that have shareholder value, that have an actual physical business that benefit from a move higher. So if you look at this is CCI, Crown Castle. Crown Castle went all the way down to about 86 in October, but then what is this, 24? Let me just do the 1 year, sorry. Right here. You can see here, it bottomed out in January of 25, around $86 a share, right? This thing still issues a dividend, and it's a dividend that somewhat covered, right? They do have some near-term maturity debt that they're going to have to refinance at a higher rate, but this is one of them. And look at this move up since the 10 years started to go in the other direction. They started to move higher very quickly. So this industry is very safe. They rent out cell phone towers to companies like Verizon and AT&T, and they make money on that. And these are fixed contracts. They're not going anywhere. And they usually come with built-in escalators every year. That means that every year the rent that's there keeps going up. So they're not renting to like a mom and pop shop. They're renting to like some of the biggest companies on the planet, and they can't go back on these contracts. So this thing at one point in September had actually jumped all the way to $120. The great thing is, because this thing is not very volatile, the options prices on this are actually really attractive.
Which screen are you sharing right now?
Oh, sorry. I was sharing the wrong screen. My bad.
That's all good.
Yeah, here we go. So if you look at this, right? This right here, if you look at the 1 year chart, you can see in July, this thing had gone back down to about $96 a share.
Hold on a second. My bad. That's my fault. That's my fault.
Yeah.
Okay, go ahead.
So if you look right here in July, it was about $96 a share. Once the interest rates started to come down, it jumped all the way right here. It's about 120. Right now, it's trading for about $90 a share, right? And it's still issuing its dividend. It's still paying what it's supposed to. But the thing is, if interest rates continue down, one, they'll be able to address the debt, the near-term debt that they have quicker, and also be able to maintain that yield, because the yield is already there. So that means that it's going to become really attractive to people looking for a dividend. So this thing could rally all the way back to 120. And you know what? If we end up going back into ZERP, which I highly doubt, it could actually go all the way back into the 160s and 170s. So I think a lot of times people say, well, where can I get some good fixed income, lock it in and basically chill? This could be a possibility. There are some other things that are happening to this business where they might be selling their fiber business that could impact their future dividends. But that's something that I'll probably end up doing like a video on and just cover that. But the options on this could actually be quite attractive if we're thinking that the 10-year treasury is going to get back down to the threes again, you know? And so this way you can see that move up from 96 to 120. It's a pretty large move. This is a low beta stock. This thing will to 120. And in which case now, if you have some leaps on this, you make some good money, especially if you do spreads. So
yeah, this is the company that that helps build the infrastructure for a lot of the towers,
cell phone
right?
towers. Yeah, cell phone towers. They have
yeah.
micro towers and they have big towers. And they
I think
have assets too.
I have a small position in ASTS still.
Yeah.
I just feel like that's going to yield me more, mostly because that's part of a secular trend. This is a good hedge though.
SMCI is up 4% overnight. NCLH is up 1.5% overnight. RCL is up 2%. CCL is up 2%. I think the market is waking up, and I think this Friday thing, they're just going to shrug it off, man.
No, I agree. I think they're going to shrug it off too. I think a lot of people are going to be pissed. Yeah. They probably went short. They probably went short on Friday.
China's been on a tear, bro.
Still?
Yeah. Well,
goodness.
FXI is up 1%, so it's at 36. BABA is actually flat, which is actually it's down a little bit, but yeah.
I think if US comes back this week, I think China's going to go down, only because I told you this before. Last October, oh look, NuBank's at 11.14. No, last October, when we saw China rally, the US was flat to down. And then when China pulled back hard, the US ripped up. So they're also kind of divergent with each other. So if the US rallies this week, I think that's when China's going to pull back a little bit. But we'll see. We'll see. Yeah, we know Easy Lightweight. Easy Lightweight was like the only guy. Well, not the only guy, but he was like screaming BABA for a long time.
Easy, are you still loaded up on BABA? Are you loaded the hell up? You didn't sell any, right?
I think he said that he sold the options, but he stuck to his shares. But it's like, yeah,
dude, my FXI calls are both in the money now. Like not both. Like I have 200 calls on the FXI, so I have 32, 35. I'm considering buying back my 35s and selling 40s against them. I'm thinking about it. Because now, basically, I've made money on that. So it's like, you know.
I mean, we'll see. Easy Lightweight's still doing well. I mean, who would have known that was going to happen? I think that's the reason I rallied, because everyone is like so sour from it, including myself, that like we were just so burnt that like we literally just watched it. I just watched it just go up, and it's like, oh man. I mean, it's fine. Yeah. Not a big deal. Other stuff still did pretty well. So, but yeah, no, I thought I did finish my thought, right? Yeah, I thought I did finish my thought. Okay. Anything else we should talk about?
The cruise lines will recover. There's nothing wrong with the cruise lines. They will recover. This COVID thing, this is like this deep seek shit, bro. It came in. It's going to be like by next week, no one's even going to remember this anymore. That's how crazy this earnings season has been. And then like the Trump administration, bro, I'm getting a little bit tired of the constant like back and forth. It's like, bro, we're going to hit them with tariffs. And then it's like, oh, we'll push it off. And then every business person in the country is probably like, I don't know what to do, man. This guy is he's just throwing numbers out the door at this point. Then Elon is like, I want an email from everyone about what are they doing? It's like, huh?
No, I mean, I don't know. Looks like Tesla's going to be refreshing their Model X and Model S later this year. That's going to be interesting. It's going to be very interesting.
Yeah. So I think when it comes to valuations right now, valuations do look a little bit extended. But there's definitely still a lot of opportunities in the market. So just like I said, hold tight. Right now, NuBank is the opportunity that I think works out the best for all of us. So I don't know if you have any positions in NuBank. but the $15 calls is what I have, and I have a lot of $15 calls, and I plan on selling $20 calls against them in a probably in the next like 3 to 4 weeks once this thing gets back up to where I think it's going to get back up to. And yeah, it'll be nice to get all my money back and then chill.
Yeah, opportunities for me. I mean, I put a hold on my DCAs for a little bit, but I have been buying with cash, but as far as adding money to the account, I've been slowing down with a little bit. But I haven't made any moves or grab lately. I've just been holding. I haven't really done anything. Yeah. Mercado Libre is pretty nice. I'm considering trimming that one a little bit. Amazon, I don't know. We'll see. The mega cap stuff is pretty scary right now. I'm not going to lie, but just still holding strong. I'm looking at 4 companies right now. One of them is Axon. One of them is TTD. I added a couple of shares of TTD right after the earnings, but not really a lot. Like it's just, just to kind of get some in there. But honestly, I already have my TTD position built out a little bit lower than where it is right now. So I'm not really looking to add right now. Toast. And I forgot the 4th one. But Axon is something I'm doing a little bit of research on right now. But I don't know. We'll see. To be honest, like I'm not. If I'm going to buy something, it'll be like through DCAing or adding new money to the account. It's not going to be through selling something and buying something else for the most part.
Yeah.
Any update in VZ? VZ is at 43 now, but it's probably because the interest rates are decreasing.
Yeah. Well, the thing is, Verizon benefits from being a safety stock, because like I said, the last thing people are going to do is cut their internet, Next Decade and VG are both likely to be somewhat flattish for now, mainly because this whole thing with Russia is starting to kind of resolve a little bit. So people are like, well, if they resolve with Russia, that means that the Russians are going to export natural gas to the Europeans again. And I don't think the Europeans, I know Europeans can get kind of up there, but I don't think they're stupid enough to become reliant on the Russians again for natural gas. That'd be the dumbest thing. But it doesn't really impact a lot of companies anyway. Especially exporters, because they're just basically doing the liquefaction. If they don't sell to the Europeans, they're going to sell other places. There's India, there's China, there's Japan, there's South Korea. There's still so much demand for it. And a lot of people also like, oh, there's a lot of capacity that's going to be coming on from Qatar. I'm like, nowhere near the levels that we're going to need in the future. So don't worry about it. For me, VG is a very long-term play. Probably 5 to 10 years out. But in the meantime, I'll be sitting there collecting a decent dividend. And yeah, that'll be awesome. Russia launched hundreds of drones against Ukraine. See, there you go.
I don't know. Whatever. I don't think that's ending anytime soon. I think they're going to cycle the funding on that one, though. I don't think Trump wants to fund it anymore. And he wants to pass it over to Europe. But I think that was the whole point of that little bit of scare that he was talking about, where he doesn't really want to fund Ukraine anymore. He doesn't want to fund it anymore. He just wants to fund it less, and he wants to pass that cost over to Europe because Europe has started to build up the defense again.
No. So get this. I did not realize this. I just read this in the op-ed. Okay, so the Ukrainians got money from the Europeans, and they got money from the U.S. The U.S. heavily gave the Ukrainians money, right? According to Ukrainians, it was a grant. Now, I get it. The U.S. has always been very generous with stuff. But apparently, the Europeans have a contract with them to get their money back, whereas the U.S. just gave it for free. So Donald Trump was like, no, we're not doing that. And so according to what I read from the op-ed from Scott Bessent, basically said that Zelensky came to the U.S. and said, look, I have minerals. I'll sell you these minerals as a partnership. And they had all of this stuff worked out. And then when Trump sent these guys over there to sign it, he's like, nah, I can't do it. So this is such a weird situation that's happening in Ukraine right now. But yeah, it's just, I don't know.
It's part of cutting he's trying to cut the funding. He wants to get the the debt to GDP ratio down to 3%. It's at 6% now, and
Yeah.
I think it's going to head. I mean, that's one of Scott Bessent's the three threes. So
Yeah.
I mean, we'll see what happens, man. I think that's about it. I got to bounce, but
All right.
yeah. I mean, you guys
See you
got
later,
any
guys.
questions? General questions for general members or super fan members, and priority questions for premium members. Obviously, premium priority questions is going to be answered first. But yeah, guys, please utilize those channels. We
Yep.
also have other members responding to some questions as well, which is awesome. Thanks, guys.
Yeah.
Yep. So the recording is going to be available as soon as we're done. Take care, everyone.
Later. Have a great night. Take care.